Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy and livestock producers manage the risk. I'm your host, Jim Matthews, reporting from Chicago ahead of a wintry wonderland crashing down on the city, potentially half of a foot of snow hitting the Windy City. Got a whiteout on the windows here, looking at the Board of Trade building. Nice reminder, it's still winter. It is still winter. It's also still winter down in Kansas. And joining me from Kansas, as always, is Director of Feed Foundations, Mr. Jake Kingsley, and returning to the Grain Feed from way down in Atlanta, Illinois, Director of Buyer Relations, Mr. Verl, no doubt, Prather. Team, how are we today?
Pretty chilly.
Doing well down here, Jim. Way down here.
And Verl, way down in Atlanta, Illinois, you're just getting a dusting of this storm that's hitting the Midwest, right?
That's right. So far, at least. And I tell you what, when you say half a foot rather than 6 inches, it sounds like a much bigger deal.
It sounds like he was trying to get a job at the Weather Channel, is what it sounds like.
Well, hey, man, I mean, I could make that curtain a green screen. Who knows what I can do?
1/10 of a billion people to be affected.
I think that's significant. We have a lot of significant things to talk about, and all weather related to an extent, because yesterday, on Tuesday, we had our February WASDE reports. We have Verl Prather on with us today to talk a little bit about that WASDE report. Some of the numbers that we saw from the USDA. It was certainly an interesting report day for those of us on the grain and feed side. But first, if we could please kindly ask Paige to timestamp the broadcast, because it is Wednesday afternoon here at about 3:15 Chicago time, and the markets had a nice little turnaround today in corn anyways. We had a down day yesterday in the May corn futures market, but a nice recovery today that essentially, let's say, replicated Monday's trade on those May corn futures. We're right back above $5 per bushel after yesterday's sub $5 close on Tuesday. So we closed at 504 on Wednesday afternoon, which is up 6 cents a bushel. We took May wheat down a couple cents. We closed at 588 on the wheat market. We had May beans. Beans did not have a recovery today. Beans continue their slide post WASDE, down almost 15 cents on May futures at 10.45 3/4. And May meal, that not as stubborn little byproduct, also collapsing with the soybean market, got awfully close to $300 per ton this afternoon. In May meal futures tested 301.40, closing down $2.40 per ton this afternoon. So a lot happening in these grain and feed markets. And let's turn to Mr. No Doubt Prather down in Atlanta, Illinois, to digest what happened in that WASDE report yesterday. Verl, the February report is not known to be a wild roller coaster ride of a report. I think we were expecting, though, maybe some changes on the U.S. balance sheet. The USDA gave us 0 changes on the U.S. balance sheet. What are your thoughts on those numbers yesterday?
Yeah, I think you hit the nail on the head there. I mean, the biggest surprise to me on this WASDE report from the USDA on Tuesday was the no change, right? I mean, we've all been talking about corn exports being ahead of schedule to the degree of about 176 million bushels even. And soybean exports are actually well ahead as well by about 75 million bushels. The USDA obviously decided that it wasn't worth changing the export demand for neither of those crops, at least in the U.S., although they did lower world or global ending stocks for both, which is pretty interesting, right? The trade at first didn't really know which way to go, trading on both sides of even for quite some time before really breaking lower. It was surprising to see that about a 15 million bushel miss on analyst expectations within the US caused such a negative trade for corn. But yeah, I guess we'll have to see as time goes on if the USDA doesn't come back and start to look at those export numbers a little bit closer here.
Yeah, Verl, I think on the export numbers were really interesting for a lot of us because they ended up lowering those corn exports out of the US in the January WASDE report. Some could argue that was to soften the blow on what was a pretty dramatic yield cut in the US corn supply side, the production side. They did lower exports, but we were wondering then maybe yesterday after they did not do anything to export, if perhaps the USDA is maybe hedging itself a bit against what has been some very volatile trade policy threats and discussions, depending on which way you look at it. But just think of maybe just 10 days or so less before this WASDE report was released. We had the Mexico, US, Canada trade disputes, Mexico being our top corn buyer and very impactful with the demand we've seen from them. So perhaps a reason to not raise exports on this report. But also the ethanol side, we thought maybe the USDA could be justified raising that ethanol usage number just slightly. They chose not to. And we've been talking a lot about that on our respective teams, right? Verl, of margins are actually pretty rough if you are an ethanol producer, right? We've got near $5 corn. We've got 70-ish dollar crude oil. Margins do not look good, but these guys continue to run that ethanol grind at a pretty strong pace. What have you been seeing on that front?
Exactly right. We've continued to just kind of wait to see, hey, when are these guys going to start to slow down the corn grind? Because as you mentioned, margins are just not there right now. Obviously, it's not easy to shut off an ethanol plant and turn it back on the next week just because he decides to do so. We have heard a few ethanol plants starting to slow production, even idle production, but mostly in some territories that have had a really rough few years of getting their hands on bushels. So it's not too surprising there. And then here we are, another week with ethanol data that came out just today, and demand is still hanging in there. So time will tell on that front. If we continue on this trend of tighter margins, you would expect to see some folks to at least start throttling back a little bit, not necessarily shutting off completely.
Yeah, I think something we also don't talk about maybe as much on the ethanol side is that we are a pretty notable ethanol exporter. The demand from the foreign markets for our ethanol has been strong. So we could argue why there's been encouragement to continue to produce it. But again, the margins just aren't there for these guys. And we're already running at not a record pace, but a very strong pace, at least compared to the last several years now. So, but again, USDA did not touch those numbers. As you said, Verl, they did touch the global balance sheet slightly. We saw a bit of a reduction in Argentina and Brazil, which has been a widely discussed topic of, hey, just how hot was it and dry was it in Argentina? Have recent rains alleviated that situation there? And also that delayed Brazilian bean planting maybe has caught up with us just slightly with a somewhat delayed bean harvest, maybe just by a week or so now at this point, and how that impacts that second corn crop in Brazil going into the ground, which of course is now their major crop that they then supply the export market, right? So some potential competition maybe hitting the global market soon in terms of US corn, regardless of what happens with all these trade policies. Verl, on the soybean side, again, unchanged here. We lowered Argentina a bit more than we did corn, and Brazil just by a touch on the soybean side of things. The completely different reactions, though, in the corn and soybean market. Corn recovered today from where it was on Monday. Beans, though, exact opposite way. How are we feeling about what's happened here between this corn bean spread? We're in February. We've got about 6-7 weeks until the planting intentions report at the end of March. More and more folks are going to talk about the rotation of beans and corn here in the US. And as that bean corn ratio of no beans versus D's corn continues to arguably move in corn's favor, right? We're looking at no beans at 1044, D's corn at 473.5. That ratio continues to, let's say, narrow towards favoring corn. What are we feeling about that as we head into, the late winter months and then ultimately spring? Is that going to be an impact?
To your point, domestically within the US, kind of on the tightrope for both commodities, right? Where we don't necessarily have a ton of buffer room for corn or soybeans. But I think the big main difference is the global stocks. We've used more corn globally than we produced. And our ending stocks have seen the effect of that over the last 10 years or so on corn, whereas soybeans is completely opposite the case, right? We grow many more beans than we actually use in a given year. And so our ending stocks continue to grow and grow. And we're starting to see that really come to fruition when you consider new crop grain prices here in the US, where we're approaching that 2.2 bushels of soybean to corn ratio. So, yeah, I think all eyes will be on this USDA Ag Outlook Forum, which is about 2 weeks away from today, where they'll put their first estimates on US acreage. And then going forward, right, the March 31st prospective planting report is going to be massive. I mean, we've already heard many comments from producers that they're looking and intending to plant more corn this year. And this type of trade that we saw today is just going to amplify that.
I think that's dead on, bro. So you mentioned the end of Feb USDA Outlook Forum that kind of sets the tone a bit for the month of March, because that's kind of the maybe best guess from the USDA and their economists on what we might be planting. But then, yeah, that initial survey, end of March, I mean, we're going to have an initial feeling of what folks are actually going to do in that rotation. So it should be really interesting. Jake Kingsley, as we look at this balance sheet and we talk about the movement of the way the soy complex has shifted in the past 2 days after that report versus corn, we do see meal. We said that not a stubborn little byproduct, pushing down towards 300 again on futures. Have we seen a shift in basis on the protein side because of this shift in futures?
We saw a breakdown in soybean meal basis when futures initially made their rally higher. We have not seen any sort of recoil as futures run back down towards 300 yet, at least not in the old crop window. So we spent a lot of time this past year kind of putting in targets close to what we would have considered the historically average mark for a lot of different regions on soybean meal. And we were able to step in and own those numbers on most of our needs, if not all of them. And here in the last handful of weeks, we've actually pushed 5, 10, in some cases $15 a ton below those levels. I think primarily on record or near record NOPA crush data coming in the last few months. So soybean meal's been under pressure and it remains there. We haven't seen it break further. It's steadied itself to a large degree over the last couple of weeks now. We're not seeing that play out in canola. There's actually a little bit of premium built into a lot of the canola market. There are some areas of the country that are average or very close to it. But there are many areas that have a premium built in, and it's just because of the unknown that comes with this tariff rhetoric and how this is going to shape up. Because again, 90% of the canola that's produced in North America is coming out of Canada. And so you're looking at potentially a $50, $60, $70 a ton price hike on that stuff as soon as it crosses the border, if there is in fact a 25% tariff thrown on that. So a lot of questions there. Processors and vendors at the top of that supply chain are reluctant to put out long-term offers without knowing the details of the trade landscape going forward. So that protein market has really split in two, with the opportunity being on the soybean meal side for now. If you take a look over to corn, we've seen a similar trend to what we had in soybean meal, where this rally up to $5 really has grain moving into the commercial pipeline. Basis just hasn't had to do much of the work to keep that stuff flowing. Maybe that's starting to change a little bit now, as over the course of January, getting through the first of the year and flirting with the $5 mark, a lot of producers got caught up to where they would traditionally be on their sales for this marketing year. And now I've kind of taken a step back, taking a fresh look at what they have left in the bins to market and where they want to turn that loose. And so basis in some areas has perked up on corn by maybe a nickel or a dime, not some total retracement back to where we started, but the pressure seems to be alleviated a little bit to where we're not working this thing lower anymore, at least not until we get some sort of new news that would encourage further selling or imply that we have a greater supply than we're expecting at this time. So that's kind of steadied in the corn market. And then flowing from that over into the ethanol conversation you guys were having, we have been talking with a lot of folks and stepping in and cleaning up any remaining needs they have on distillers or gluten byproducts and things in that portion of the dairy ration, because those feedstuffs have been down close to the low end of their range. They've been within probably $10 or $15, in a worst case scenario, $20 a ton of what I would call historically average. And you've been talking about weak ethanol margins. If at some point these plants do start to really reduce production in a meaningful way across the country, we're going to see a pop in distillers and gluten and related products as that supply starts to tighten up. So worthwhile to step in there now and take care of what we need, at least in the next 90 days, if not all the way out through September.
Jake, the comments that you had there of the soybean meal market, futures have broken down pretty aggressively back to $300. So that's a $20 to $25 break from, let's say, the highs of the last couple of months. And yet basis has not really bumped up as a result of that, right? Which we often see that inverse relationship of, futures take a dive, maybe basis elevates. So potentially some opportunities here for folks that need to clean up old crop soybean meal usage on their protein side of, we're suddenly flirting with $300 a ton again on the future side. Basis has not really rebounded despite the break in futures. So maybe an opportunity there, depending on where you're located, potentially clean up some of your old crop soybean meal needs. But as you said, on the canola side, different ballgame. We've got a lot of trade uncertainty there. I think that's where we're seeing a lot of this volatility in the market, whether it's on the cash side for canola products and or the futures side in the corn market. We had a wild 7 to 10 days ago stretch of slapping 25% tariffs on Mexico and Canada. Then they were pulled back and kicked down the road, a month? So we've got till about the 1st of March or so until maybe we rethink those. So those are kind of on the back burner, but they're still there. We're still worried about that deadline. It's still causing some anxieties in the physical and futures markets. But then, back to the bean balance sheet with Verl, the Chinese element of this, we have not walked back those tensions. We've continued to kind of raise the stakes on each side with China. And when it comes to our exports, the bean side of things, right? China is the one buying our beans more so in that big conversation, not really the corn side of this. But when it comes to the bean market, they are our big player. And that's the market we're seeing really nosedive after that WASDE report. So really interesting, effect there on what the global trade policy discussions, as well as the fundamentals here in the U.S. and South America. So we've crammed in a lot of great info here today. Great work to you both. A huge thanks to Verl for returning to the show. Verl, thanks for being here, bud. Always good to have you.
Oh, you bet. Hi, Matsy's family.
Yeah, I was gonna say this is gonna make people's week throughout my family here. So thanks for being here. We'd also like to thank the Everegg Insights crew for their support. Thank you to Paige for production magic, and thank you to the viewers for watching the Grain Feed. Contact information is on the screen. Greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.